Hello everyone, welcome to 72 Portfolio Intelligence. Today, we'll discuss about the sectoral indices and how they have performed against Nifty 50. In this video, we'll cover 5 top outperforming sectors who have done relatively well against Nifty 50. Let us talk about our first outperformer, that is the metals index. The shares of metal companies have been on a run for the past few months. This has led to an overall surge in the Nifty Metal Index and it is now the top sectoral gainer on the National Stock Exchange. Here are some metal index constituents that have surged more than 100%, giving a push to overall sectoral performance. This rally can be attributed to industrial metal prices reaching multiple year highs globally. This is because of the weak US dollar, the decline in inventories, and a decent demand from major economies such as China. Recently, China cut export rebates on most of its steel products. This includes hot recoiled oil, cold rolled sheets, galvanized plates, and many more products, effectively from May 1st, 2021. You can see the performance comparison over here, as we have prepared a graph which compares Nifty 50 performance, the metal index performance, as well as the metal stocks performance. Now let's move our attention to the information and technology index. The Nifty IT index is another outperformer that has given returns of 49% YTD. Since the outbursts of COVID-19 and countries imposing lockdown restrictions, many companies have worked from home and the virtual platform usage has risen. This has led to an increased demand for technology, gadgets and various other IT services. There has been a renewed optimism in the IT sector after TCS management said they continue to be in a multi-year tech cycle. Many IT companies have upped their EBIT and EBITDA margins quite substantially. You can see the top Nifty IT constituents and their performance over the years. Shares of Mindtree and Emphasis have given returns of more than 100%. One perspective about the IT index that has surprised everyone is that Infosys, which carries a significant weight in the Nifty IT index, has almost doubled within a year. It has grown from a 52-week low of 970 to a 52-week high of 1757. Similarly, another constituent that has caught investors' attention is Mindtree. It has performed 174% YTD. Now let's talk about banks. PSU banks or public sector banks have had the best performance in the market. Since the government proposed to fix the bad loan problems through a bad bank called NARCL. NARCL, or the National Asset Reconstruction Company Limited, has been incorporated under the Companies Act and has applied to the Reserve Bank of India for license as an asset reconstruction company. The NARCL is a bad bank created by the government in the mold of an asset reconstruction company, where the idea is to pick up bad loans above a certain threshold from banks and aim to sell them to prospective buyers of distressed debt. You can see the top Nifty PSU bank constituents have performed relatively well against the Nifty 50 index. Banks like Indian Overseas Bank and the State Bank of India have given performances of 93% and 61% respectively. The Nifty PSU Bank Index has surged nearly 34%. This has outshined the broad market index and the private sector peers. Several factors apart from the bad bank announcement have come together to give a boost to the valuations of these public sector banks. Lenders have fixed their capital and the recent amalgamation of 10 PSU banks into 4 bigger and stronger banks have given balance sheets more heft to handle additional stress. One of the many reasons is also the recent reduction in the bad loan pile of the largest lender, and its recorded quarterly profit in the March quarter has increased optimism among investors with hope of its peers mimicking the same performance. As you can see in the performance comparison chart below, the State Bank of India has outperformed the Nifty 50 index by a margin of 35%, and there are various other banks who have outperformed the Nifty 50 index and contributed towards the Nifty PSU Bank Index. Our next outperformer is the Nifty Infra Index. The Infra Index has outperformed the broad market by a margin of 10% YTD. This rally can be attributed to increased demand brought on by post-COVID economic recovery, as there was a sharp fall in the economic activity for a better part of 2020. The Government of India has laid down many recovery plans for hardly hit sectors such as infrastructure, which has brought some optimism among the investors in 2021. India aims to invest 100 trillion rupees in infrastructure to boost economic activity and create jobs. Prime Minister of India laid out national priorities on the country's 75th Independence Day. In the Union Budget 2021, to support initiatives such as Housing for All and Smart Cities Mission, the government allocated 13,750 crore rupees to Amrut and Smart Cities Mission. In FY 2021, the infrastructure activities accounted for 13% share of the total FDI inflows. This accounted for $81.72 billion. One more factor that adds to this phenomenal performance is the rally in cement stocks. This rally was brought on by an increased optimism in the infra sector. Cement is a very important component that supports the infrastructure activities. The Nifty Infra Index constitutes of more than a few cement and construction companies stock who have contributed toward this performance. The year 2020 was meant to be a year of recovery for the Indian real estate sector, especially the housing segment. After 3 years of business disruptions caused by demonetization, implementation of GST, REALTY law, and the NBFC crisis, the market had started stabilizing. However, all hopes were shattered as the COVID-19 global pandemic hit India, forcing the government to impose a national lockdown. However, the year 2021 brought new growth in the realty sector. This recovery can be attributed to factors such as consistent demand for large-size properties and a higher flow of global private equity funds. This was ensured by a good risk-adjusted returns by the realty sector. This swift recovery signals a revival and stability in the industry as the need for affordable homes increases, caused by the rise in remote working culture. The pace of revival can quicken provided the government extends a helping hand and injects enough stimulus to boost the sector and the overall economy. This is what actually happened with the realty sector. The government announced the budget to ease the norms for debt financing of REITs and InvITs. And in July 2021, the Security Exchange Board of India lowered the minimum application value for REITs from 50,000 rupees to 10 to 15,000 rupees to make the market more accessible to small and retail investors. For more information on sectoral indices, please visit www.72pi.in.